Hi, now I'm going to introduce myself first. My name is NANTHA. I am from D83B. My NAPTRI number is 06D8019F1042. Now I'm going to explain about my subject is Cost and Management Accounting 1. The main objective of managerial accounting is to assist the management of a company in efficiently performing its function, that is planning, organizing, directing and controlling. Management accounting help with this function in the following way is provide data. It serves as a vital source of data for planning. The main purpose is of management accounting is utilize the accounting information in solving the business problems and taking scientific decisions. Moreover, the scope of management accounting is very wide. Therefore, it is very difficult of pinpoint the exact scope of management accounting. Now I'm going to explaining the scope between financial accounting and cost and management accounting. Scope management is the process whereby the outcome and benefits are identified, defined and controlled. Scope is the term used in the management of project to refer to the totality of the outcome and benefit and the work required to produce them. For cost and management, forward-looking record by further analysis a daily, weekly, or monthly basis and can plan and policies to improve performance. For financial accounting, historical in nature record at the end of for each accounting year can easily understood the context of the purpose. For difference between cost and management accounting and financial accounting is, for requirement, cost and management accounting is no mandatory rules. For financial accounting must follow the rules. For governance, cost and management accounting report present both on a monthly basis. For financial accounting, audit accounts signed and filed annually. For recording, cost and management accounting at cost function and cost units. Financial accounting proper ledgers maintained. For my conclusion, which is better, management accounting or financial accounting? Managerial accounting is more concerned with operational reports which are only distributed within a company. Financial accounting must comply with the various accounting standards, whereas managerial accounting does not have a comply with any standard when information is comply for internal conceptions. Thank you. That's all from me.
Assalamualaikum warahmatullahi wabarakatuh. Nama saya Muhammad AKMAL Nazmi bin Said. Nombor pendaftaran saya 06 DAT 19F1063. Hari ini saya akan present question 4. Present and give example the key concept in cost and management accounting. Okay, the first one is cost. It is defined as the amount of expenditure incurred on or attributable to a given thing. Second is cost object. Cost object is anything for which a separate measurement of cost is desired. Cost object is defined as any unit of cost accounting selected with view to accumulating all costs under that unit. Cost object may be product, a service, a project, a customer, a brand, an activity, or a program. Last one is direct costs. Those costs which are directly identifiable and has direct relation with the finished product are called direct costs. These costs form part of the prime cost of the product. Example, direct material, direct labor cost, direct expenses royal on production. Okay, that's all for me. Thank you.
Hello, my name is Kaming Yao. My number metric is 06DAT19F1036. Now I want to continue present about the concept in cost and management accounting. Okay, now I want to present about the indirect cost. Indirect costs are costs that cannot be directly identified to the cost object. Like direct costs, indirect costs consist of indirect cost materials. indirect labor and indirect expenses, and they are costs which cannot be specifically identified to individual cost project. The example of indirect cost is utilities, IT system and network, purchasing, management, test, legal functions, warranty, guarantees, quality assurance, accounting function, and marketing and publicity. Then I want to start present about the conversion costs. Conversion costs are costs other than material costs, labor costs, and manufacturing overhead are needed to convert raw material into finished good. The example of conversion cost is completed units, direct wage, indirect wage, indirect material, equipment depreciation, office expenses, and factory insurance. Okay, now and the last, I want to present about the cost center. Cost center is a location, person, or item of equipment for which cost may be excreted and allocated. There are predominantly two types of cost center. It is production cost and non-production cost center. The example of cost center is marketing department, human resources, research and development, work office quality and assurance, engineering, logistics, and procurement. Okay, this is the end for my presentation, and now I want to pass the presentation to Zuhairi. Thank you.
Assalamualaikum warahmatullahi wabarakatuh, and peace be upon to Madam. My name is Muhammad Zuhairi bin Muhammad Zaid. My registered number 06DAT19F1045. I would like to present about the question 5 is talking about the relevant and irrelevant costs. We also cost for planning and control. Alright. Alright, for my first point, relevant versus irrelevant costs. Alright, what is relevant costs? Relevant costs are the costs that is affected by the decision that the company or manager takes, which is or decision making that made by the manager will impact of the cost. Okay, then what about the irrelevant costs? Irrelevant costs are the costs that is not affected by the decision that the company or manager takes, which is everything that manager takes the decision making, whatever it takes, that it will not within in the cost, or not might be include or not might be affected by the decision making of the manager. Alright, let's see the more detail. Alright, for the firstly, relevant costs. Relevant costs play crucial role when company has several alternatives to choose from. What about the irrelevant costs? Irrelevant costs have no bearing when selecting from different option. Alright. Okay, for the next one, relevant costs include the expected differential, avoidable, and opportunity costs. How about the irrelevant cost? Irrelevant cost includes sunk cost and unavoidable cost, or fixed cost. Alright. What I want to show is relevant cost and irrelevant cost. Alright. I want to give example like this. Alright. Just assume that our company has a car. Alright. We have been used the car in about 10 years, might be. Alright, let's assume we have used the car in about 10 years. After that, each of the year, the car will be depreciated. Alright. So for the depreciation cost, which is the irrelevant cost or relevant cost? So when the depreciation cost, it will include into the irrelevant cost. So the manager could not take any decision about that. Alright, so if the manager still want to use the car, then it will in fact for the depreciation cost will in fact to the irrelevant cost. But in case if the manager takes decision to buy a new car to get a better performance, to get a better about another thing, to become more early at the meeting or something. Alright, so the cost to buy a new car will in fact to the relevant cost, which is the manager takes decision to buy the new car. So who makes the decision? Of course, the manager. Within without the permission of the manager, the company will not buy a new car. So decision makes by the manager, and the impact of the manager will include to the cost to buy a new car. Alright. Alright, relevant costs are generally variable, operational, and recurring. Alright, how about the irrelevant costs? Irrelevant costs are usually fixed in nature or relate to the capital or one of spending. Yeah. Okay, relevant costs usually relates to the short term. Alright, short term. And irrelevant costs are generally for the long term. Relevant costs are affect to the future cash flow, and irrelevant costs do not affect to the future cash flow. Yeah, just it's like example for the, if we buy a new car, of course in the future cash flow will be decreased. How about the irrelevant? It will not include because it's fixed. Alright. Alright, a company must not avoid relevant costs when making a decision. Alright, how about the irrelevant costs? A company must avoid irrelevant costs when deciding. It may lead to a wrong choice. Alright, so it have to be considered. Alright. Alright, for the next one is cost for planning and control. This is quite simple to understand. Alright, in cost for planning and control, we have two points importance that you have to know. Alright, for the first one, controllable costs, and second one is non-controllable costs. Alright, for controllable costs are costs that are within the control of the manager. It's mean what? It's mean like controllable costs, the manager can control the cost within, the manager want to take it or not, but it depends on the manager and how the knowledge of the manager within it's like if the manager have made a early preparation for analyze or just alright, for my further explanation, we read the point first. Alright, controllable costs are costs that are within the control of manager. Controllable costs are costs that are targeted for cost reduction by manager. Example of controllable costs include production wastage, production efficiency, and production reworks. With a proper planning and control, production managers are able to reduce controllable costs without compromising product quality. Alright, I want to give an example. Alright, if we in a factory, and then in the factory we are a manager. Alright, since we are manager, then let's say that we want the quality is same, but the duration is one is long and one is quite early lah, in about maybe 2-3 days early, and one day is late for 2 or 3 days, which is the quality might be same, but probability for the wastage for late for 2 or 3 days is lower. Late is lower. Then from the early 2 or 3 days is higher for the wastage because they want to faster. So the quality might deteriorate, the quality might be lower, and there will might be wastage because it's always refuse. So it might be in fact Alright. So this is about how the manager manage. So this is the how the manager takes or what we can say, how the managers use their role of thinking as a manager. Alright. Alright. How about the controllable cost? Non-controllable cost. Sorry. Non-controllable costs such as factory insurance, premium, and factory rent are very much fixed, and such as these costs are not targets for cost reduction. For planning purpose, these costs which are unavoidable are treated as fixed. Alright, let's say the factory is like we said that we have factory and then we rent the land. Alright, or we rent the factory also, might be can, I don't know, maybe we can we rent the land, and then uh we rent the factory lah, we rent the factory. After that, the cost of the rent that we have to pay as expenditure is fixed. It cannot like for January is high, for February is lower. It cannot tax like that. Even let's say that my production for January is increased, and for February is decreased. So is it will impact to the rent? Of course not. The rent, even I get the higher production or low, the cost for rent is still same. Right? Just that's all. And that's all just for me. Thank you for watching. Alright. Thank you.